So you're gearing up for your national meeting of the NVCA.
Right.
What are the topics that are most on the minds of venture capitalists today?
I think venture capitalists are very concerned about how are they going to exit their deals. We had numbers come out a couple of weeks ago that showed that we had 0 IPOs in the first quarter. That's the second time in a row. We see acquisitions becoming much more squishy, as I say. You continue to see acquisitions going on, but acquirers are getting smarter. They're waiting for these companies basically to go begging to be bought, and so the prices are coming down. And so venture capitalists, at the end of the day, it's about returns, and they are not being able to get those returns back to their limited partners right now.
Do you think there's a bit of a disconnect between what the buyers think properties are worth versus the venture capitalists and the entrepreneurs themselves? In other words, have they not understood how low valuations have to go yet?
No, I think everyone's pretty realistic on the buy-sell side. I think where you do continue to see a little bit of unrealistic expectation is at the very beginning of the process, where entrepreneurs are out there trying to find a venture capitalist and they think they have the next Google on their hands, and venture capitalists telling them in this economy it is not a Google idea.
What do you think will happen to accelerate the pace of exits for venture-backed startups?
I think that really what we need is a stable stock market. And that doesn't mean a market that doesn't go up and down. That means like we're seeing gyrations of 500 points every day. And you really need some stability there long term. And we have not seen that stability. And I think there have been a lot of areas where we thought that we'd see stability. It was, first of all, you heard about, well, things are going to get better after the election. Then it was after the inaugural. Then it was after the stimulus package got signed. Then it was after the banks got some stability there. And all these things have happened, and yet we still see a very volatile stock market. And I think that until you see investors confident in the market, and that's institutional investors and your everyday investor, until you see that confidence come back, it's going to be very hard for our companies to either to go out and into the public domain or get acquired.
Let's talk for a minute about the funding climate. There are obviously venture capital firms that are out there now trying to raise funds. What are they finding from the LPs?
It's a very difficult environment. Investors today are saying, we continue to be interested in venture capital. We like what the venture capital industry has done long term, but we do not have the resources at this time to be putting new dollars into new venture capital funds. And so they're telling them, come back and see us down the line. And that's difficult for firms who are out there right now fundraising. But those VCs who are out looking for money, I think they're going to have to look at different sources. It's not going to always be your traditional colleges, endowments, pension funds. I think they're going to have to be looking at smaller pension funds. I think they're going to have to be looking overseas. There continues to be a lot of interest in our asset class from entities outside the United States. And then the other issue that's not talked a lot about today is the secondary market. There are a lot of investors who can go buy very good pieces of venture capital funds on the secondary market, and they're saying, why should I go invest in a totally new fund when I can actually pick up a very nice piece of a prior fund through the secondary market?